So Thursday is 10:23. Let's jump in here to come some of the spreads. Natural gas, take a look at where we are. You get natural gas trading at 427. Looking at the January contract. Talk about some volatility, man, even since this morning, right? We just traded at 5:30 in the morning. At 406, we're up more than 20 cents in the last, what is that, 5 hours.
It's huge.
Yeah.
That's $2,000 in the contract.
Just huge moves. So we'll start it off, let's see. So 11 a.m.s, we're trading at 427. We have 425 with exposure, which is not bad. You know, if you're bullish, so we have two, like, excuse me. Let's get what this is. So $32 this is costing us, or as it ticks around, now 35 at 482. And you're paying almost a full penny above, you know, when the market's trading at, but not bad when it just moved 20.
Not bad, right?
When you, you know, you look at that risk reward just to pay 1 penny. So that's your bullish spread. That's where you're going to have the intrinsic value. Here's your spread where you're almost 2.5 pennies out of the money, so that's going to be your cheaper spread. Looking at $9. Now, keep in mind, man, if you're ever just bearish, that's a pretty sweet trade. If you ever think it's going to come back down to we were just at 406, you'd have profit potential down to 405, right? And you're looking at almost a 1 to 20, 1 to 19 risk-reward ratio. And of course, you know, the reason why you're getting that is because you're selling it at 424.5. The market right now is at 427, so you're almost 3 pennies out of the money in terms of where you're trading it. But not bad trades when you have a market that's trading 20 cents. And to pull that chart up again, pretty remarkable.
20 cents in 2 hours, right?
And we were just, and even more ridiculous is that we were just at there yesterday morning. So in 24 hours, we traded down 20 cents and right back up, let alone where we've been. You know, we were just
it's surprising. That's why I said, when I said to you, it's surprising because this morning, that's the first thing I brought up. Well, when I brought up the futures, natural gas was at the top, meaning the most amount of loss. Inside the Bloomberg, I says, wow. You know,
so I just put this on a daily real quick, and just huge bars, man. Every bar is huge. You know, look at 30-cent bar. That looks tiny on the chart. That's a 15-cent bar. That looks tiny on the bar. You know, I mean, just huge, let alone yesterday's bar. Look at that, 32 cents, in today's bar, about 25 cents of movement so far.
Let me bring this up and
go for it.
So if we'll take a look at this intraday. Now, this is going to be a delayed quote, but
all the way in the bottom. There you go.
Look at that. It was, now, and this morning, it was all the way at the top.
Okay. That doesn't take much, right, when you're talking about, because to be at the top, you'd only have to be down 2%.
Right.
And the way natural gas is moving,
Okay, so, 5:30, we're at $4. You're coming into, pull this back a little bit more. It's a tough call, man. And that's why when you have something like this, meaning that it's really like, okay, which way are you going to go? That's where these volatility trades are pretty cool, actually, because it has plenty of room to go both ways. You know, like up here at 450, that's the last time we had big volume on the way down. You know, that being said, you can see that you're coming into downdraft of yesterday morning. That's 426. Yeah, looks like this wants to pop a little bit higher. We'll find out real quick.
Right.
Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 167, NADEX up 24, S&P's up 11.5. Come right back. Welcome, folks. Dow Industrials up 117, NASDAQ's up 9, S&P's up 4, and the volatility in that S&P is just absolutely incredible. All the indices,
both
actually.
Directions, totally.
So let's go take a look at this natural gas number.
So 10:30, the number, stockpiles falling 77 billion cubic feet. Median estimate had been for a decline of 80 billion cubic feet, so pretty close to estimation, slightly off. We'll jump back to the futures market. Here we are, we're looking at 5-minute bars, so pretty close to where we were, right? We saw a little bit of a thrust downward, trading to 425.54, kind of right back up to 427, right where we were sitting at when we were looking at those trades. So we'll see what happens in that market, but not too big of a reaction so far, as it comes pretty close to in line with expectations of what they were looking for. And while we do that, check out natural gas.
Look at that. That was quick.
So again, 5-minute bars. We just traded from 427 down to about 423. We'll keep our eye on that, but volatility in that market, to say the least, coming at you, man. I would have defined risk if I was trading that market. That's one thing I would be happy to tell anybody and stand behind. Is that you're going to be trading natural gas right now. You don't want to get wiped out. get some defined risk on your side.
No doubt,
Yeah.
no doubt. So let's go back to natural gas for a second.
Sure, yeah. So we get the contract up here. We got some volatility, man, for sure. I mean, there's your 1030 bar, right? Let me get that. 5-minute bars again we're looking at. So, I mean, that's almost a 7-penny bar by its own right. We're at 428.9. It's called 429 almost, down to 422. We're sitting at about 424. And to refresh, we were trading at about 427.5 before that. The contracts were lining up at about 425. You'd have exposure in both directions. But the volatility is persisting. That's the one thing I'd say. I mean, these, every 5-minute bar, it used to take a full day to get 3 pennies of movement in natural gas.
Oh my God!
And you get it every
Seriously?
minute now.
Yeah.